What if I told you that right now, Bitcoin is sitting at the exact level that could decide whether the market rallies again or crashes another $10,000? One level, just one. And in the next few days, the entire direction of the crypto market might be decided. Because while many traders believe the worst is already behind us, some analysts are quietly warning that Bitcoin is standing on extremely thin ice. If buyers lose control of this level, the next move could send Bitcoin falling straight toward the mid-$50,000 zone. But if bulls manage to defend it, a completely different scenario could unfold. And that's exactly what we're breaking down today. Because behind the quiet price action we're seeing right now, something much bigger may be developing. Bitcoin has been trapped in what traders call a sideways grind for weeks now. The kind of market that frustrates both bulls and bears. Price moves up a little, then pulls back. Breakouts appear close, but never fully happen. And this kind of slow, grinding consolidation often hides the most important turning points in a market cycle. Right now, Bitcoin is struggling with a resistance level that has been capping rallies for months. Every attempt to push above it has failed, and each rejection reminds traders that this barrier remains extremely powerful. What makes this level even more important is its history. It traces back to the low formed in April of last year. In technical analysis, levels that once acted as major support often transform into resistance when price returns to them. And that's exactly what appears to be happening now. Bitcoin recently tested that zone again, but instead of breaking through, the market pulled back. That rejection triggered the weakness we're currently seeing. And now traders are watching closely to see whether buyers still have enough strength to defend the next key level below. Because the weekly close is approaching, and weekly closes often carry far more importance than short-term price movements. They show where large institutional money is positioning itself. Retail traders often focus on hourly charts, but institutions watch the weekly structure. And right now, the weekly close could provide the first real clue about Bitcoin's next major move. At the moment, Bitcoin is hovering around a technical level that many analysts consider extremely important, the $67,000 region. This level lines up with the famous 61.8% Fibonacci retracement. For traders who follow technical analysis, the 61.8 level is often called the golden ratio of markets. It frequently acts as a turning point where corrections either stop or accelerate. If buyers step in here, the market could bounce. But if this level fails to hold, the downside path becomes much clearer. Earlier this year, the broader market structure suggested a possible bullish scenario. The idea was that Bitcoin might first rally toward overhead resistance, pause, and then continue higher as part of a larger corrective wave pattern. That scenario hasn't been completely invalidated yet, but the pressure is growing. Each time Bitcoin fails to break higher, confidence among bulls weakened slightly. At the same time, bears are beginning to see small cracks forming in the market structure. And those cracks are exactly what traders are watching right now. Because markets rarely collapse instantly. They usually begin with subtle warning signs, small breaks in momentum, unexpected weakness, and price movements that stop behaving the way strong trends normally should. One of those warning signs appeared over the weekend. Bitcoin slipped below the lower boundary of its short-term trading channel. Now, technically, this isn't yet a confirmed breakdown. Markets sometimes dip below channels temporarily before recovering, but it does raise concern, because strong bullish structures typically respect their trend channels. When price begins slipping outside those patterns, traders start asking questions. Another concern lies in the structure of the current pullback. Healthy corrections often unfold in what traders call a three-wave pattern. A clean move down, a bounce, and then a final drop before the trend resumes upward. But the pullback Bitcoin is currently forming doesn't look perfectly clean. Instead, the movement appears more complex, more uncertain, and that makes the market harder to read. When structures become messy, it often means the battle between buyers and sellers is intensifying. Right now, the market is sitting at what many analysts call a decision point. Two possible paths are forming, and both depend on what happens around the $67,000 level. If buyers successfully defend this area, the current dip may simply be a temporary pause. In wave analysis terms, it could represent what's known as a fourth wave pullback. Fourth waves are common in strong trends. They shake out weak hands, create uncertainty, and then allow the final push higher to occur. If that scenario plays out, Bitcoin could still have one more major move upward ahead. But if buyers fail to hold this support, the entire structure begins to shift, because below the current range sits another critical zone, the $55,000 to $56,000 region. This area contains multiple technical factors converging together: previous market structure, historical support, and additional Fibonacci levels. When multiple technical indicators align at the same price level, traders often call it a confluence zone. These zones tend to attract strong reactions. So, if Bitcoin falls toward that region, it may become the next battlefield between bulls and bears. However, that bearish scenario only becomes likely if the current range floor breaks. Right now, that floor sits roughly between $61,400 and $62,600. As long as price stays above that range, bulls still have a valid case. But the margin for error is shrinking, and every time Bitcoin drifts closer to those levels, tension builds in the market. Because traders understand that once a range breaks, the move that follows can be extremely powerful. Ranges compress energy. The longer they last, the stronger the eventual breakout tends to be. And Bitcoin has been compressing for weeks. That means when the breakout finally happens, it could be explosive. What makes this moment even more interesting is the broader global environment surrounding the crypto market. Geopolitical tensions have been rising. Energy markets have been volatile. Traditional financial markets are dealing with uncertainty around interest rates and global liquidity. And Bitcoin has increasingly been reacting to these macro forces. In previous years, Bitcoin often moved independently. But as institutional money entered the market, correlations with traditional assets began to grow. Now, macroeconomic headlines can influence crypto prices far more than they once did. For example, changes in the strength of the US dollar can affect liquidity across global markets. When the dollar strengthens, risk assets sometimes struggle. When liquidity expands, assets like Bitcoin often benefit. That means Bitcoin traders are no longer just watching crypto charts. They're watching bond markets, central bank policies, inflation data, and geopolitical developments around the world. All of these factors create a complex backdrop for the current price structure, and they make the next move even harder to predict. But despite all the uncertainty, one thing remains clear. The current level is extremely important because markets tend to revolve around psychological zones. Round numbers often act as magnets for price. 60,000, 70,000, 50,000. These levels attract attention from traders across the entire market. When price approaches them, trading activity increases, and that activity can fuel major moves. At the moment, Bitcoin is hovering right between two powerful psychological areas: the $67,000 support zone above and the $61,000 range floor below. If buyers step in strongly here, confidence could quickly return to the market. A bounce might trigger renewed optimism. Traders who have been waiting on the sidelines could start re-entering positions. Momentum indicators might turn upward again, and suddenly the narrative would shift back toward bullish continuation. But if sellers gain control instead, the story could change very quickly. Because once the market senses weakness, momentum often accelerates. Stop-loss orders get triggered, leveraged positions unwind, and what begins as a small drop can rapidly turn into a much larger move. That's why traders are paying such close attention to the upcoming weekly close. Weekly candles filter out the noise of short-term trading. They reveal the true direction of the market. If Bitcoin closes the week strongly above support, bulls will claim victory. But if the weekly candle finishes weak, the psychological impact alone could push sentiment toward caution. And sentiment plays a huge role in crypto markets, because crypto is still heavily influenced by expectations. Fear and greed move prices as much as fundamentals. When traders believe the market will rise, buying pressure increases. When they fear a decline, selling accelerates. And right now, sentiment is balanced on a knife's edge. Some investors see the current pullback as a healthy correction within a larger bull cycle. Others believe it may be the early stages of a deeper retracement. Both arguments have valid points, and that's exactly why this moment feels so tense. Markets rarely provide certainty, they present probabilities. And at this exact point, Bitcoin is approaching one of those rare moments where probabilities will soon shift dramatically in one direction. Either buyers will step in with conviction, or sellers will take control of the next move. Until that decision is made, the sideways grind may continue. But once the market chooses a direction, the move could be fast, very fast. So the big question remains, will Bitcoin defend the $67,000 level and prepare for another push higher, or will the pressure continue building until the range finally breaks, opening the door to a drop toward the mid-50,000 region? The answer may arrive sooner than many traders expect, because markets often move when the majority least anticipates it. And right now, almost everyone is watching the same levels, which means when the breakout comes, it will likely catch many people off guard. One way or another, Bitcoin is approaching a decision point, and the next chapter of this market cycle may already be beginning.